Hello traders! Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, June 9th, and I'm Michael Boutros. Good to be with you guys this morning for this final webinar of the week. So we're finally starting to get, I don't want to, crossing my fingers, I don't want to get too excited, but we're starting to finally get a little bit of a near-term bounce here in the dollar. Also, looking at some of the com block, we were looking at crude yesterday heading into a critical level at 51. You saw it cross the headlines on CNBC and Reuters and Bloomberg. So we'll take a look at that. The initial response looks like it could be good. And also gold, which was also heading into that 1262 barrier, which was obviously a 618 retracement of the decline. You also had a nice basic trendline resistance there. Also looks to be coming back. These pullbacks have been shallow. They've been short-lived. We don't want to get too comfortable, and we'll certainly go over some of those setups. So yesterday we talked about Euro Key and the US dollar. We'll go over those. The RBNZ was a doozy. We'll go over the results of that. Euro dollar still holding the weekly opening range, which is sort of why we played Kiwi through Euro Key as opposed to playing it through the dollar, although that's starting to get some kickback as well. And we'll go over dollar CAD, euro pound, and euro Oz. Any other pairs or trade setups you guys want to review, as always, feel free to drop them in the message board. All right, so good morning, Prabendra, Eileen, Mark, Mario, great to see you guys. Hussein, I see you in the room here. I was looking through the Twitter feed, Hussein. It looks like he might have accidentally clicked unfollow for SB Trade Desk. So just go to the SB Squawk Twitter page and hit follow again. I'll go ahead and approve that. No worries. I was looking through the follower list. Doesn't look like you're on there for some reason. Adam, great to see you in the room, my man. All right, so let's jump right into things. Before we get started, a quick look. No problem, Hussein. Anytime, man. By the way, here's the link. Just go ahead and click follow on that, okay? Relative performance for the greenback ahead of the U.S. Open looks like this. So you have the Kiwi, obviously top performer on this session, up 1.47%. This was up almost 1.76% overnight on the back of the RBNZ interest rate decision. Second best performer, yen, up 0.53. Biggest loser on this session with a slight pullback here is a 0.48% downside move in the Aussie dollar. So we'll jump into the dollar index real quick to give us a broader picture, and then I want to go into some of the Kiwi metrics on the back of yesterday's release. Here's what the dollar index looks like on the daily chart. Here's what we looked like yesterday. Here's what we look like right now. The major support that we were looking for was 11,800, a simple 618 retracement of the entire ascent off that May decline. Now we're heading into initial resistance right now that we noted last night, and that was 11,830 into 11,839. You had that high volume day close, a huge drop that we made there post NFPs. We closed right in that section. You had also the August low day close at 11,830 and a nice pivot in price there. As we noted yesterday, let me show you the scalp chart. Here's the 30-minute look like last night. Here's the 30-minute looks like now. So as we noted last night, initial resistance that we would look for on the way up is right here. Here's where we're trading right now. Now on a breakout of this near-term channel, I wouldn't be looking to go, completely nuts on the upside here. But you are testing near-term resistance, and I do want to note a couple of things. This is the initial weekly opening range low and also the weekly open. So I wouldn't be surprised to see another stretch a little bit higher here into U.S. trade, but broadly speaking, we're looking for short triggers below the weekly open, which is 11,855. All right, so sub 11,855, I'll continue favoring short exposure on the index. A break below 11,830. And you're looking for a soft target, 11,787. Okay, some swing lows there. And a nice pivot in price. And that coincides, actually no, we already passed that. Next level that coincides on the actual channel support is way down here at 11,751. All right, so near term bearish sub 11,855. Break below 800, you're looking for 787 and 750. So levels pretty clean. No change on those levels all week long. We still continue to watch the same exact targets here on the Dow Jones FXCM dollar index. So Any questions on the dollar index before we move off? Again, just a nice barometer for base dollar movements. Not going to want to extrapolate our bias here across all the dollar pairs, but certainly at its inception, equally weighted average of the euro, Aussie, sterling, and yen. This index, in my opinion, gives us a really nice representation of what the dollar base move is. Okay, so if there are no other questions on the dollar, we're going to go ahead and jump right into the Kiwi crosses. So before we do, yesterday's interest rate decision. So here's some of the commentary that came out from the RBNZ last night. Look, we didn't expect them to move on rates, and certainly they didn't. But there was a big and significant shift in interest rate expectations. We'll start off on Kiwi dollar and then jump into the Kiwi yen, or the Euro Kiwi. So the takeaways here: further policy easing may be required. Kiwi strength holding down tradable inflation. Okay, this is something that we've also heard the Fed hearken to with regards to appreciation in domestic currency, keeping down that inflationary picture. Remember, all these central banks are trying to stoke inflation. So strength in the domestic currency will always tend to weigh on that objective. So that was a takeaway. Another thing that we saw is an upward revision to the inflationary outlook from 2.0 or to 2.0 versus 1.8. We're also seeing that the inflationary target of 2% is expected to be achieved in the fourth quarter, of 2017 versus the first quarter of 2018. These are long out projections, but what it's telling you is that the central bank is a little bit, let me take that back, is that the central bank's outlook for the economy is starting to improve a little bit, right? They are expecting inflation will pick up more than expected. And that was reflected not only in the commentary, but also overnight swaps, which I'll show you in a moment. Further policy easing may be required was another one. And then later in the presser with Graham Wheeler, one other thing that he said was there's room this year for additional easing for another cut, one other cut. Now, when we look at what interest rate expectations were last night, this is what we were immediately after the release. If you guys remember here in the webinar, we were looking at it and it showed above 50% for both September and November, right? Here's what the credit or overnight swaps look like right now. And this will sort of put things into context for what's going on with the Kiwi. Okay, so you can see now that November read that we were expecting at 54% is now up, to 62%. Oh, nice rebalancing here. And then September back up to 50%. So what happened in overnight is you saw this, and I tweeted it on the feed. You saw this drop as low as 33% for August. September was down to 49%, which left November as the first possibility for a hike. Now you're starting to see, as the markets digest the commentary, you're starting to see those expectations come off. This has actually come off from just this morning before the webinar. We were looking at 48% still for September. Now it's up to 51%. And as this moves higher, remember, this is the probability of a cut. As this moves higher, that'll start to cap the advance that we're seeing in the Kiwi. So the material shift that we saw yesterday from expectations for an August cut getting kicked back till September, getting kicked back till November, now starting to materialize in price. Here's what Kiwi dollar looked like on that release. Remember, we talked yesterday about the 70 handle, how we've seen some messy breaks. It's coinciding on basic trendline resistance. It's not the most, it's not the sexiest response you want to see to resistance, but certainly it was a level we were looking at. Obviously, the break speaks for itself. So where do we go from here? I don't want to get excited about the long side sub 7150. And Raj, I don't know if you're in the room here. You were asking on Twitter yesterday, am I still bearish? I'm not. I wouldn't want to say I'm bearish. I'm looking for resistance and a turn in the index, or a turn in the Kiwi ahead of 7150. Now you're looking at some pretty big levels here, aside from the key and basic 618 retracement off that high from April of last year. You do have basic parallel resistance. That's just a parallel of trendline support. You have the median line coming off the lows, which converges right on that region. And again, that 618 retracement. Now just higher, 71.75. You do have the 2011 low day close. And I'm going to take a zoom out just to show you how that looks. This is going way back in price. But here's the 2011 low. Okay? And that was sort of the first target on the breakout that we saw yesterday. The 2011 low day close comes in just higher at 71.75. So basically a key 25 pip region of resistance here. I would expect to see a little bit more rigid ceiling for the Kiwi dollar near term. Does that mean we want to go short? I wouldn't encourage anyone to start playing hero on this. I'm not going to lie to you guys. I was on the short side of this trade right on the back of not the release of the statement, but Wheeler's comments. I was in extremely heavy. I took it out and I kind of, cowered away before I went to bed last night and kind of just closed out the position at a small gain. You don't want to play hero on these types of stretches. As the interest rate expectations started to shift more abruptly, it kind of scared me out of the trade. And we're not fundy traders here, guys. You all know that. We're guided by price action. Price action is what we study. Price action is our profession. But when we see the fundamentals tracking price or moving alongside with it, you don't want to ignore it, right? So I didn't feel comfortable holding a short on this as we saw interest rate expectations for a cut starting to get kicked out even more. So hindsight's 2020. You did get a near-term pullback. I still think you can spike into one final high here. Remember, the U.S. has not gotten a chance to respond to the RB&Z interest rate decision that came after the U.S. close. So I wouldn't be too surprised to see one last spike high here, but we're looking for some near-term support at 70.50. That's not a fib. That's just simply the high that we made for May, and it converges really nice on the slope lines we've been following. So on a pullback into this region, if we do that today, I actually would be looking for possible long exposure, long triggers off this region. If we close below 70.50, I'd like to take a more neutral stance on the Kiwi. That puts this thing at risk for a false break scenario. And if that's if that's going to in fact materialize, it could fall apart pretty quick. So initially, right now, heading to U.S. trade, we're looking for a possible pullback into 70.50 for possible longs. If we do stretch into a final high to tag that 71.53 level, be on the lookout for a little bit more of a near-term pullback off that level. I wouldn't be completely opposed, guys, to taking a small, light, short position on a final stretch into this high in U.S. trade. Remember, it would be a counter trend trade both to the weekly opening range bias and to the broader outlook. So you do want to, maintain very light leverage on that pullback. But I wouldn't be completely against a play like that if we do get a final test of the highs here, especially because we just turned ahead of it. So heading into U.S. trade, either a spike into this region, look for some short triggers, or if we do get that drop towards support, I'd be looking for possible long exposure off that region. Any questions on the Kiwi? All right. Remember, this is not represented in the Dow Jones FXCM dollar index, so we don't want to extrapolate those biases against each other too hard. But that's sort of the game plan here moving forward for Kiwi dollar. Again, if any of you need to take a freeze frame or a snapshot of the screen, feel free. All the levels here are noted in yesterday's report, or on the radar charts rather from a few days ago. Okay, so into yesterday's report, let's go to number 2, which was the Euro Kiwi, and this is the one I rather play as opposed to dollar index, or as opposed to Kiwi dollar, just on account of, look, the Euro has been doing a whole lot of nothing. If we look to Monday's, or this was Tuesday's radar chart on the Euro, this thing hasn't done anything. It's just had a slow melt higher. We saw an abrupt turnaround last night, and we're right back within the confines of the initial weekly opening range. So with Euro drifting towards resistance and not really doing much, I would have expected Kiwi strength to give this thing some downside. And if you guys remember, this setup that we're talking about in Euro Key, we put this together here in the webinar. I'm not sure who asked about that. Do you want to remind me if you're in the room today? I'm not sure if it was Adam or Mir. Someone was looking at Euro Key, and it turned out to be a beautiful play yesterday. We talked about this consolidation. Joe, there you are. Mr. Joseph saying it's me. So yeah, we were talking about this consolidation, Joe. That RBNZ prompted the beautiful drop that we were looking for in Euro Key. Again, the initial downside target would have been looking for 60.99, followed by 59.75, and the yearly open at 59.17. We've taken all of them out. Okay, and now we're testing the yearly open as near-term support. So immediately right now, not looking for any fresh new Euro Kiwi exposure. If we do get a rebound, you want to look for resistance right back up that near 61 with bearish invalidation still right here at 61.78, which are the lows that we made back in April trade. So the daily chart's pretty clean. Nice formation break. Again, remember, typically these triangle patterns are continuation patterns. Now, on a downside stretch, a conservative target, and again, I'm not a longer term trader, but for those of you who want a little bit larger, a longer term of a horizon, a conservative measured move of the triangle breakout would give you a target down here at 49. Okay, it coincides very nicely with that swing low and a 764 longer term. Got to get through the yearly open first. If we do clear 59.17, the yearly open, that would constitute a yearly opening range break. So if you guys look at this, the yearly opening range took place in January, and since January trade, we've been trading inside the confines of that range. So the entire singular range that we made in January, ever since February, March, April, May, we've been contracting within that range. So a break here would certainly, in my mind, suggest that the deeper, longer running time frame here, you do want to be looking lower in Euro Kiwi. All right, could be a false break. If it breaks and it moves back up through 61.78 on a close basis, forget about it. Immediately you're at support, looking for the rebound to get back on the short side with an inevitable break here, really validating a much more concerted downside bias. And let me just put a soft target right there at the 54 handle. Here's what it looks like on the 30-minute chart, and here's what we look like last night. So I know it's a messy chart, guys, and there's a lot of lines going down here, but I just wanted to highlight a couple of things. 59.75 into 59.88 was a big level. If you noticed, I don't know if you took note, you had a really cool overlap. This is a 1618 extension of the entire decline off the yearly highs. That's at 59.88. On the daily chart, this is an exact 1618 extension of just the May decline. And that put them, literally like 10 pips apart. So a nice cushion of support. We went through that. The yearly open is the major support level that we're looking at right now. Okay, so look for some rebounding here. You marked some divergence into those lows. Oscillator making higher lows, price action making lower lows. So I wouldn't be surprised to see a little bit of a pop higher. Ideally, I don't think you're going to get too much on the upside towards like 62. But if we get a move towards 60.90, that 61 handle would be an initial area. I'd start to look for a possible reentry back on the short side. Remember a couple of things. Obviously, the broader triangle breakdown has implications for much deeper pullback here. And the downside break of a descending slope will tend to typically be your sharpest part of the decline. The topside breach of an ascending channel will tend to be the sharpest part of the rally. So all indications point to possible further losses here. That said, yearly open is likely to give us a little bit more kickback. Look for that pop to give us opportunity back on the short side here for Euro Key. Any questions on this pair? Good call. I'm bringing this up, Joe. Thanks for bringing it to my attention. If you remember, we put that together right here in the webinar. I wasn't looking at this pair. Now I am. By the way, this is a basic 236 off yesterday's low. I kept it in gray here because we have no way of validating the low yet. So I just use this for reference to where the first 236, where's the first area I'd start to look for initial resistance. And actually, now that we have a new low, that brings it down to 61.50. So keep that in mind as well. Initial resistance 60.94, 61 handle. Mir says, is Kiwi strength related to speech of governor that cuts in interest rate cuts in interest rate is not in the horizon? So Mir, he said that cuts in the interest rate are on the horizon, but the reason that Kiwi rallied, my friend, is because we were expecting more cuts. He lowered that expectation to just one cut this year. I know it's hard to wrap your head around at first, Mir, but basically the markets were expecting 2, maybe 3 interest rate cuts from the RBNZ. Remember, they're very, very, very closely related from an economic standpoint as far as their output to Australia, to what's going on in China. You got concerns on both ends. RBA is expected to cut rates. China is expected to see some slowing. So they're kind of been prepping the markets that there's going to be further easing down the line, Mir. Now, what he came out and said was there's room for an additional rate cut. The inflation expectations, Mir, were upwardly revised. So that means that the outlook is not quite as bleak. And that just means, look, we're still expecting cuts, but not as many as expected. And that interest rate, the expectation for a cut from August getting dropped to below 50%, getting kicked back to September, means we're probably not going to see that cut till the latter end, Q4 of 2016. And that push out in interest rate expectations has really is really what fueled some of the strength that we saw overnight. Does that make sense, Mir? Mir says, yes, thanks. Hey, you're more than welcome, man. It's hard. It's a little bit tricky to wrap your head around, but it's all about the expectations of how many cuts we'll get. Remember, they're already at 2.25, which is sort of towards the lower bound of the range for them. Joe says, no problem, Mike. I bring it up because of the upcoming Kiwi news yesterday. Hey, Joe, feel free, man. Any pair you want to look at. I'm a gold miner. I'm always looking to mine. All right. So, there are no other questions on Euro Key. Again, my favorite pair for the Kiwi strength story that we're looking for. Again, we looked at Kiwi Dollar. I'll take a quick look back at that. Or we did check that out, but just to remind you again, Euro Kiwi at support. Kiwi Dollar looking to hold resistance. Aussie Key. I just want to touch on the daily chart because I know that we were looking at this earlier in the week. Look, this is either the most wicked false break that you've seen in a couple of months here for the Aussie Key, or it's a legit break. And I happen to think that we're testing lower median line parallel support. You could get some rebound, but in my mind, this is a clear monthly opening range break. We cleared the yearly open, and we cleared the low day close from October of last year. So if you guys remember these slopes, again, I'm going to bring it up one more time. You've heard this for months now. That original slope that of which the origin dates back to the low that we made in January of 2014. All of these lines are the same slope. Slope, slope. Okay? Bounced off it, broke it, false break to the upside, rejection. So we're below this slope, still looking lower while below that. It converges on the yearly open right now at 106.60. That's the bearish invalidation level. Next downside target, wait 1 minute, stop traffic. If you take that same slope and extend it off the lows from last year, comes in somewhere in the range of like 103.50, 103.60. Okay, so I'd rather be looking short Aussie Kiwi. It's not really the game plan. I was looking for much more stringent support late last month on this rebound. Um, as broadly speaking, I was thinking that we should see a little bit more upside on Aussie Ki. Price action is saying something different, and I think we need to be paying attention. The momentum signature is clearly bearish here after coming from overbought signals earlier in the year, holding 40 as resistance. This is the deepest cut in momentum that we've seen since October of last year. That's when we saw the deepest and stringent, or the sharpest part of the decline. So again, could see a rebound, near-term resistance 105.18, inevitably looking for a drop into that lower parallel extending off the 2015 lows. So the Kiwi Crosses in general, really interesting. Really interesting. Any questions on the Aussie Ki? All right, so let's jump into Euro dollar, sterling dollar. We talked about Kiwi dollar. Here's the radar charts from earlier in the week. Look, I haven't updated these because they're the same exact levels. It's pointless to keep highlighting the same level. We went over the euro dollar. There's really not much to talk about here. I think you need to wait for a little bit more clarity on this one. Essentially, all you've done is stretch into the opening range and test it on both ends. So remember, 1385 represents the October high day reversal close, which is a level we've been watching for weeks and weeks and weeks. We just missed the 618. I would have loved to see a rally into 1417 before turning over. That being said, you're now testing the weekly opening range low and a close below the February high day close. Same plan as yesterday, guys. 1320, in my mind, is what would set this thing off for a little bit more of a recovery play to the downside. Remember, this is a big region. Okay, this is just a basic parallel of the same slope. And here's a momentum turn just ahead of 40. So I know it's Thursday, but at the end of the day, if the opening range break happens this late in the week, it's still an opening range break, right? So we'd still look to maintain a downside bias if we clear 1320 to the south side. So there's not really much to do on euro dollar until we clean out this range near term. Sterling dollar looks like this. Very similar situation. I don't really want to touch it. We've been talking about this yesterday, and we talked about the fact that, look, broadly speaking, this needs to hold support into the close of the week. On a daily close basis, it needs to close above this sliding parallel to really maintain the upside bias in the pound. Obviously, it's the British pound, guys, and this thing is notoriously known as a professional trader's market. And with the upcoming Brexit vote happening, you're going to see a lot more whipsaw, I'm sure, heading into the 24th. So for me, I'm still favoring long exposure while above that median line. We filled the gap, which was a decent play earlier in the week. We pulled off that to come back and test essentially near-term support where we opened the week. Right here at 144.71, the weekly open. But there's really not a trade idea for me here. So let me just snap these levels for you real quick. There we go. So from a trading standpoint, it's one thing to know the direction, one thing to know the levels, and it's another thing to actually have a trade plan or an opportunity in the pair. For me, the only trade that was available here was the rally that we noted earlier in the week, citing that upside bias to fill the gap and into channel or median line resistance. Beyond that, I really haven't touched this thing. I don't have anything to do with it. For me, I'd need to clear 45.88. All the levels remain unchanged for sterling. So 45.88 still the level to beat as the bearish invalidation for the upside here in pound. If we break below the median line on a closed basis, sayonara. You'd look for a much steeper pullback to the downside. Are we going to sit in this range till the 24th? No way. Okay, there's just not enough room from a timing standpoint to sit in that range. But near term, you do need to really clear this, either above 45.80 to get on the go for the longs, or close below that median line to continue favoring shorts. So another one. Sorry to come up with all these sort of neutral biases for now, but it's still important to have these key levels in front of you. so we know when the break happens and we're ready to operate on the setup. Okay, so in my notes I have sterling dollar testing slope support. We talked about that. Any questions on the pound or any of the pound crosses? Sort of off the radar for now until we clear this range. And again, this week constitutes the entire monthly opening range so far. So on its face value, you're basically right where you opened up the month. Not much going on here. Kiwi dollar. All right. Dollar CAD. So tomorrow we do get the release of the Canadian employment figures. They're pretty variable. Sometimes they charge really nice volatility. Sometimes we don't get too much. Here's what the expectation looks like for tomorrow's read. We are expecting the print of 1.8 thousand jobs for the month of May. Unemployment, as we noted yesterday, is expected to uptick to 7.2%. And obviously we'll be looking at the participation rate, which currently stands at 65.8. So if we see this uptick and this goes to 7.2, that's fine. Really wouldn't worry about it. If we see this downtick or hold at 65.8 and this still upticks, that would suggest again that you're seeing contraction in the labor force. Not a good development. Okay, and they've been pretty variable as far as the employment figures from Canada. So look for that tomorrow morning at 8:30. We'll keep you updated on SB Squawk as that is released. But looking at dollar CAD, here's what the daily chart looks like. So let me zoom this out real quick. A couple of things just to take note of here for the broader structure on dollar CAD. Obviously, the break below 29.85 earlier is kind of what set this thing off and invalidated the upside bias. I'll remind you again to that long-dated trendline resistance in purple that you see here dating back to the 2006 low. Okay, that was also converging on that region. The break below this put us bearish. Initial targets to the lows that you made for September. We hit that. Basic trendline resistance, parallel off that, extending off the low that you made from the 12th of last month, basically caught the low and overnight. Here's what it looks like, or yesterday's trade rather, excuse me. So again, this is just a basic parallel of this trend line here, and almost perfectly catching that low. Also broadly just pivoting around that 1618 extension from the decline off the highs. Near-term resistance, 27.55, 27.56. It's basically just a nice swing high here that you made back in April. Nice pivot in price. And converges on the upper parallel here in the U.S. trade. Now, with what we were talking about, again, remember, CAD is not included in the Dow Jones FXCM dollar index. However, with what the dollar is doing, if we're going to get this near-term recovery here into Thursday, I would be looking, again, for some resistance right around these parts, if not 28.30, for some possible re-entry back on the short side. Bearish invalidation is still going to be 29. Even if this thing rallies towards the 29 handle, I do not want to get super constructive until we clear that to the upside. So looking for short triggers around this region into US Open. If that breaks, again, subsequent resistance, looking for that 29 level to see if that holds as resistance and possibly a nice short exposure for dollar CAD moving forward. Questions on the loonie. Kind of matches with what we're seeing in crude, right? Crude prices coming off resistance. That should be some CAD weakness. Give us some pop here in dollar CAD to the upside. So again, pieces of the puzzle fitting quite nicely here, heading deeper into June trade. Since we're talking about dollar CAD and what's been going on with the crude prices, let's take a quick dive into crude price. Here's what U.S. oil looks like. Okay, so 51, you've heard us talk about it for weeks and weeks and weeks. We finally came into it yesterday, and weird, we closed above it. Everyone started second guessing it. Oh my God, we're going to $60 a barrel, blah, blah, blah. We still very might well, but This is notorious type of price action for a market as widely watched and as widely uh, reported on as crude. Okay, just like sterling, with everyone talking about the Brexit and all this headlines and talk, you see that the sterling price action is quite messy, right? Break of resistance, pull back, break of support, pull back. This is what kind of reaction you get on these trades. So with crude, I could easily discount this as a false break scenario to the upside if we close on an outside day reversal, which we're working on right now. We're almost there. What's the low yesterday? Was 50.30. The low today is 50.32, 2 cents away. But if we do post an outside day reversal at resistance, that would be a bearish development. Also keep your eye on this support trigger that we've been watching in momentum. A downside break here would further validate a near-term correction. Near-term support, you're looking for 48.60. Okay, it's the former 618 off the decline from that May high, but more importantly, you also have structural support here of the lower median line parallel and a sliding parallel off of that April low converges right on that, heading into the close of the week, early next week. Francis, sorry, I missed your comments, my man, says, please, can I take a pic of the CAD 30-minute? I need to adjust my CAD 30-minute. Yeah, sure. Dollar CAD. Go for it, Francis. All yours. You got it, buddy. Anytime. So, there goes the outside day. So we've made an outside day at this point. Is it going to be an outside day reversal? I can't say that until the day closes, but looks pretty good. Initial response looks great. Near term risk is for a pullback deeper in crude sub 51. That puts the upside bias in dollar CAD at play, possibly for a recovery back towards that 29 handle. But initial resistance, we're still looking at 28.30 there. So keep that in mind. Jot those notes down as you're trading throughout the session here. So, when we tweet these things out, especially if I put it on MB4X, which is public, I do get a lot of responses. And I got a lot of hate yesterday for publishing that chart on gold. So I just want to review it with you guys. I know you've been watching it here in the webinar with me for a while, but when the public sees it, they get a little different of an opinion on what we're saying. Look, gold was at resistance. I don't care if you're bullish, bearish, neutral. The resistance is there. When we note resistance, guys, doesn't mean that you just get bearish point blank, just blank, point blank you're bearish. It just means that the upside likely to see a pause, could see a little bit of an exhaustion trade. I think that's what we're getting. It's a basic 618 retracement. It's a basic trendline resistance, and it's a nice confluence region. That's all. People tend to interpret, there's resistance, let's short. From a scalper standpoint, yeah, we'll take some short exposure on that and just scalp some points to the downside with a real tight stop. But from a trend standpoint, not saying it's necessarily going to reverse the trend all the way lower. So long story short, here's what gold looks like on a 30-minute chart. In my personal opinion, this thing has been textbook clean. There's nothing here. Let me take a step back. People will tend to correlate, gold is moving higher, crude is moving higher, S&P is moving higher, but the dollar is doing this. They try to put all these things together to rationalize what's happening. First of all, crude and gold will not always move together, guys. Okay, especially if markets turn over more abruptly. That'll be beneficial for gold. Not so much to the benefit of crude as much to the benefit as gold. But we want to keep each trade on its own merits, specifically on these commodities. When you look at something like gold, which has much more inherent value than just a commodity play, right? Either way, 1263, 1262 is a nice confluence region that we talked about yesterday. Again, you're at risk for a near-term pullback here. Broadly speaking, I am still looking higher in gold. Nothing's really changed that outlook, except that you're at near-term resistance. So look for a pullback. Initial support, 1250, 1251. Bullish invalidation down here at 1240. Okay, why? Well, that would necessitate a break below the weekly open and a pretty decent pivot in price. If you just look at my cursor right here at 1240, you have resistance, resistance, pivot support, pivot support. Weekly open is right around this region. So as long as we stay above that, I do want to continue favoring the upside. Immediate risk is for a near-term pullback here, but you'd be looking for long triggers on that move. Okay, so again, the daily chart's pretty clear on where we stand here on gold prices. Any questions on gold? 1263 resistance. Jot it down. U.S. oil, my notes say initial response looks good. Watch the close. We talked about that. Absolutely, Mark. Aussie dollar, want to take a look. I also have Euro Aussie marked down. So let's take a look at Aussie dollar first. And then we'll jump into Euro Aus. Any questions here on gold? All right. Aussie dollar coming right up. So, really nice area of which you'd expect to see some resistance. And overnight, this thing looked like it was going to crack open, which is kind of why also when I was trading on the Kiwi, I saw this doing similar price action in that it really did run right through that 74.90 level that we were looking for. The high in overnight trade got as high as 75.03, which is not by much. But here's the 30-minute chart looks like. And you can see a really nice confluence up there. Let me zoom this out real quick. All right. So very similar to the Kiwi dollar setup. A basic pitchfork off the lows. You had a sliding parallel off the highs from 2 weeks ago. Okay. Basically converged dead on at 74.90. And this was the region that we talked about in the webinar. And this is kind of where I was looking for short exposure. The run here shook me out in overnight trade. And I didn't stay awake long enough to try to jump back in. But 74.90 rejection. Here we are testing near-term support. Back at that former upper median line parallel. Now support. Beyond here is 74. Now where can we go or where can we look for as far as possible exposure back on the long side? Your initial support's at 74. Ideally, I do think you get a run towards the median line here, which takes you deeper, like 73.75, 73.80. Note that that lower median line literally caught that like decline on a couple of days spikes before turning higher. So a break through the median line, check the median line as support, move off would sort of be a decent game plan in my mind. Also, just to drill, same for me last night, but I did not get back in short. Mark on the Aussie, yeah, I hear you, man. Look, that price action, I honestly did not expect Wheeler. I should have, because he's notorious for his talk, but I didn't expect interest rate expectations to shift quite that dramatically. So once I saw the dollar, continuing back on the downside, and we saw Kiwi really start to rally, I got a little shook out. Got to stick with our convictions, though. Either way, outside day reversal, same drill here off of 50% retracement, leaves the immediate long side vulnerable. Looking for some support, ideally near 74. Again, could possibly see a run into that parallel 73.80, 73.85, depending on where we are in time. In fact, that converges right here with the median line off the lows pretty nicely. $73.80, $73.85. Let's reserve that area for a possible nice topside exposure there. And again, in fact, objective way of looking at this, aside from my opinion or anyone else's, here's the weekly open, make a low, test a weekly opening high, fail to even test the low, test the highs, break of the weekly opening range high keeps you constructive above 73.80, 73.75. So basically the same exact area we're looking for here. So again, you look for that late week high on those opening range strategies. Any questions on Aussie? Does that help, Mark? You have any specific questions on this? I'm not going to stress that anymore. Retracement's still good. And Mark says, I'm good, thanks. Hey, you're more than welcome, man. Anytime. And we could probably clean that up too. So there's sort of a clean take on that chart. If you want to take a snapshot of that, Mark, feel free. Okay. So we went over Aussie. I do want to take, he says, got it. Hey, you're more than welcome. I do want to take a real quick look at Euro Oz. I've been flirting with this one. I know that we highlighted this earlier in the week. Here's what it looks like on the 30-minute. So remember, a trade that we've been following for literally like over a month. We talked about this yesterday, so I don't want to beat this up again. The turn off 56.37 was well received. A break of the initial weekly opening range on the back of the RBA, obviously charging a nice break of the 50 line here for the current operative slope we've been working off. That decline, I'm still looking for a new low. So if you guys remember, we talked about this yesterday. We said, look, we look for resistance near that 200-day moving average, which came in right around that 52.90 level. We came in over it. It gave us another opportunity to get short yesterday. Again, an overnight trade, rallied right back into that 200-day moving average, confluence with the median line, again turning lower, although we're losing some steam on every subsequent bounce to the downside, and we had some building divergence here. So my point is this, I'm looking for a new low, and I would like to see that low register somewhere near 51.85 or 51.32. A basic 38.2 retracement of the advance, and that converges nicely later on if this thing goes sideways for another couple of days. But immediately heading into the close of the week, you have a really nice, you have a really nice area right here at 51.32, just lower, basic channel of support, lower median line parallel for the ascent, all converge right here. So an area of which I would love to see a little bit more weakness that entails further Aussie strength, and the euro dollar with what it's doing shouldn't be outside the realm of possibilities to get that last dip for a nice rebound off that region. Broadly speaking, a close or a break below 51.30, let's call it 51.15, 51.20, this 10 pip, 15 pip region here, in my mind, would certainly suggest that we have a lot more downside to go. But near term, that's a sweet spot for me. I think I'd like to be long. Again, two equal legs off the high screams correction into support. Both structural uptrend support and structural downtrend support. So I expect to see some rebound there. On the flip side of that, if we do break above this 100-day moving average, look for a move right back into the weekly open. So initial targets at 53.60, which is going to be the low, okay, that we made here, and a basic 236. More importantly, the weekly open comes in at 54.03. So another euro pair on the menu. See if we can't get to that final drop. Really nice breaking definitive move here early in the week on the RBA. Again, you're getting some divergence into these lows, so you might see some more chop here. But broadly speaking, seeing if we can get that final low here in Euro Oz. Okay, Mir wants to take a look at pound yen. Sure. I know that Jamie is following this with you guys very closely. For me, pound yen on a scalping standpoint still has me on the sidelines. It's just not really inspiring from a trade setup for me. Here's the pound yen looks like on the near term. So for me, it looks like it just made a weekly opening range. You filled that gap pretty quick, didn't take long. You stretched into soft resistance, former support at 58, came right back, and here you are rebounding again at the weekly open. Near term, I would play it as a range. I would say near term, if you put a gun to my head, I would have a long side bias against the lows. 53.02 where we bottomed out was an exact 88.6 retracement of the advance. It's not a very popular retracement, but I can tell you from experience, I've seen 88.6s catch some pretty radical reversals and pretty radical lows. I don't know if this is going to be one of them, but certainly the initial response off that region. And with pound dollar trading into structural support, again, I don't have any money on this, Mir, but if you had a gun to my head, I would say I would be looking higher. It's not really a setup I'm currently involved in. Let's see if we got any fresh levels here. Okay, it's too premature to do this, but just bear with me. I want to see what it looks like real quick. Okay, way too early to rely on this. But I do want to see if we can hold above structural support. Would be a start. Okay, I'm not going to stress that right now to keep this clean. But just keep, Mir, keep that pitchfork in your head if we do end up basing off this and moving higher. Yeah, and that's not going to be any good either. Okay, this is the February low day close. Hmm. Yeah, so Mir, again, I don't really have much for you on this one. I would say this. I would say I would be looking for some long triggers off of this region, while above that 88.6 at 153. This is just an opening range, man. I have nothing on this. You have to look for an opening range break on the week, I think, to validate. By the way, sterling yen, typically, historically speaking, if you go back last couple of weeks, has actually been a really decent opening range play. Here's last week. You made an opening range high a few days into the start of the week. You broke it on the 31st. You ended up the week right at the lows. Now, this is an extreme case because it's a reversal, but even the previous week, here was your weekly open. You stretch into a low early in the week. You break that high earlier in the week also. This is a Tuesday break. And you push into a fresh high, close pretty darn close to the highs for the week. Same thing for the previous week. I mean, we can keep going back. So for me, you stretch into a high, you set a new low, and failing to close or push below that low that you made on Sunday on the gap, for me, I'd be looking for a break of this range. By the way, Mir, if it breaks to the downside, man, there's really not much until like 52, which is the low day close. And then if you zoom this out even more, Mir, man, structural support doesn't come down to way down here, 49.90. Basically, let's call it 50. And that's going to be a variable in time as well. So the further out you go, the deeper that target gets. That being said, I'd love to be on the long side of the trade. I just, you don't want to try to be a hero in a move like this, especially on a pair that's giving you 220 pips on a daily basis. The implications of a wrong scalp on this with our type of leverage would definitely be very painful. That being said, look for a break of this weekly opening range initially, Mir, with a move definitively back above 56.40, in my opinion, sort of the clearance on a close basis, at least, to start looking higher. for sterling yen. Yeah, you're welcome. I wish I had more conviction on this for you, but it's been sort of a lackluster week for pound yen. Dollar yen, how much deeper will it go? So, Adam, dollar yen is very similar in that the yen is sort of the variable for me. Here's what dollar yen looks like. We're again testing a basic 38.2. This is a long dated 38.2 retracement from the advance off the lows that you made in 2011. Also, right. Let me zoom this out real quick. Yeah, you have to look lower in dollar yen, I think, too, Adam. Not immediately. This is just a slope I was checking out last night to see if this holds. Obviously, it didn't. We broke, checked it as resistance, and moved off. So this is no longer valid. But again, like we mentioned earlier in the session, a downside break of a descending formation, typically your sharpest part of the move. You're getting some divergence on these lows. This is a test of the weekly opening range. I think you play this range back up before it breaks. Inevitably, I do think it moves lower. Again, on some of these dollar crosses, the majors, I've been straying away, which is why you've seen most of the intraday updates have been, a lot of them have been on the crosses, Euro Kiwi, Euro CAD, Euro Aus. The dollar, I think, is doing its own, playing to the beat of its own drum with each pair specifically. Dollar yen as it stands right now, 106.20, an 88.6 retracement, another 88.6 retracement. Remember on the daily chart, we just talked about that longer dated 38.2. So I look for a new low. Near term, I look higher, but inevitably I'd look for that rally to set a new low in price. It's really uncommon that you'll get these massive drops, just base and take back the entire move like this did. This is sort of where dollar yen is notorious. This is why we call it the abomination, guys, right? It takes a month to do what it did in 2 days last month. So again, this just collapsed on a 3-day decline. The last 3 days have simply covered the rally that we made on Monday. That's all that's happened. So for me, it's just a simple weekly opening range. A break lower, you look for the stretch lows for the year. A break above the weekly high, you look to play recovery near 108. This is no man's zone, no man's land. So for me, dollar yen is very similar to what's happening with sterling yen. Although if you put a gun to my head, I'd rather be long sterling yen necessarily than try to press the dollar yen long. Adam, does that help? Again, these are tricky pairs, guys. Sterling yen and the yen crosses in general for me, I'm kind of just hands off this week. Euro pound, real quick before we close out the session here. Euro pound is a trade we've also been following very closely. Adam says very helpful, and yes, as you mentioned, I'm sitting this one out. Again, you saw me retweet. Peter Brandt is a good guy to follow, guys. I really respect his broader opinions on trading mentality, not so much necessarily his calls, but his trading mentality. And yesterday he said a good thing. The hardest thing to do is sit on your hands, and sometimes that's the best thing to do on a trade that has a lack of clarity. But sterling, euro pound rather, this is a trade that we've been following since the start of the week as well. I just wanted to highlight it. We're still holding below that slope resistance that we were looking at earlier in the week. As far as euro pound is concerned on the 30-minute chart, here's what it looks like as well. Really clean weekly opening range after breaching channel resistance. So again, look for a possible drop lower here before a rebound. Euro pound looks pretty good for a new low here. Okay, we stretched into this high structural resistance. You look for that decline to give us a new low, possibly near that 77.50, 77.34 level on this downside stretch here for euro pound. All right, that takes us into 9:30 and wraps up the webinars for this week, guys. I want to thank everyone who attended today. We'll be back on. Remember, Monday is a public webinar on daily effects. We don't get quite as deep into the metrics, but certainly give the public just a little bit of taste of what we do here each day. And then we will be back here on SB Tuesday, Wednesday, and Thursday mornings, as always, 8:30 Eastern, for some more updates on the trades we're following. Best of luck trading into the end of the week, guys. Watch tomorrow's CAD employment data, and I will see you next week. Cheers.